and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita, with me is Neeraj Shah, and let's look at where the Nifty is. Absolutely flat. As flat as it can get, but we're holding 25,500. That's the positive. It's again another day, yet another day, if I can call it, of consolidation. Third straight day this week, and maybe for 6, 7, 8 days, the Nifty has been largely flat to very, very range bound. Let's look at it intraday. Today, the Nifty banked to absolutely mirroring the index. So there's no underperformance there whatsoever. But there you go. Look at the range again today. 472, 548, just about 80 points is a very tight range that the Nifty has traded in. Saw a bit of a spike yesterday, but today again very, very range bound, right? Let's look at the heat map and try and identify pockets which are buzzing or moving. You have some NBFCs, Shriram, Bajaj Finance, which are leading, including a Jio Finance as well, which are leading the pack, and then thereafter there is FMCG names, and HUL is one of them, a hero within that consumer basket, also doing decently well for itself. For Reliance, a heavyweight is up 0.8% on a day like this. That's probably helping the index in whatever form. But look at the losers. It's largely metals. You look at Hindalco there, Tata Steel there. You also throw in some IT. HCL Tech is there. Infi also down around 0.5% odd. Wipro down around 0.9 odd percent. So that's the flavor and the texture with regard to how the Nifty is shaping up. Let's look at contributors as well. And within contributors, you'll see an HDFC Bank, Reliance among the top two. But again, no big movers except an ICICI, which is contributing around negative 16 odd points. But again, no major moves on or no big moves with regard to contributors either. Now, I want to quickly switch focus to sectors. And within sectors, metals is one of the big laggards. Realty is the other one. IT, no surprise there, given that a bunch of IT stocks are in the red, at least on the index itself. PSU banking index is down 0.33%, and Union Bank likely will be the biggest laggard there because of the numbers that have come out. The Nifty Bank otherwise absolutely flat. In terms of the gainers, FMCG again top gainer, 0.8%, second time this week. Nifty Auto is up around 0.5% as well. Nifty Pharma sitting in the green, critical on a day like this, given that US tariffs have been announced. But broader markets, Neeraj.
Well, firstly, the advanced decline should come up on your screen simply because it's well and truly in the green, and it's converged a little bit or converging a little bit because mid-cap indices are in the red marginally, but small caps are doing very well. So the key takeaways of trade, I think two key takeaways. That one, that it's a quiet day of trade and which continues, right? 6th, 7th, 8th day, whatever you call it, it's been this way. And today, IT is cracking on a day when the small caps are actually displaying strength. So which is actually one other factor to watch out for. And then there are individual pockets of strength and weakness. Firstly, the overall BSE 500 winners and losers list. And you see on the gaining side, Global Health, it's been now the top gainer for a while, followed closely by Sterling Wilson Solar, PCBL, and I'll get to the reasons why this one is up. Metropolis, Swan, continue their uptick. Surprise mover, VIP. On the losing side, there is GAIL, and there are some tariff-related questions there. Internal tariffs, by the way. Hindustan Copper, because I presume because of the copper thing, and Vedanta because of, presumably, a short seller report in addition to the copper prices as well. But, yep, the short seller node impact clearly showing on Vedanta. And we'll talk about this as well as Vedanta's response on this a bit later on in the show. Metropolis and IEX continued strength into both of these. Nearing into 2000 is Metropolis, so that's important. Then continued downtick continues for these stocks. Nectar Life, another 9.5% today after the 20% downtick yesterday. Dreamfolks continues to sulk, and Hindustan Copper too sulking in trade today. Lastly, look at the carbon black players, which is PCBL and Himadri Chemicals, and both of these have very strong moves today because Orion, which is a large global player, is looking to shut its carbon black manufacturing facilities, 2 or 3 of them, by end of 2025, and that is probably the reason why this is happening. One last piece, Harsh, something that caught my eye, and so much of chatter around whether this China Plus One story is for real, etc., and stuff like that. Delta Electronics is a company, it's a global company, which has said, we follow the customer, and if the customer asks us to move out of China, we move out of China. Now, the context to this is this, that It is setting up its newest factory in Tamil Nadu due to robust infrastructure and incentives. Is per what Delta has said in a comment, right? And Bloomberg did this story. And Delta, not only that, they've paid 65 crores for naming rights for a railway station as well. So they are going all out in making their presence felt in South India. And this is remarkable because they are saying that customers are asking Delta to source products from its plants in India and away from China. And then, of course, they want to diversify, etc., from China dependent supply chains. And then and that whole comment, right, which is that we are moving to India, we are moving out of China because customers are asking us to move out of China. So that was the really interesting piece put in by Delta. Just thought should bring it up.
No, absolutely. So it's an interesting piece that's coming out, but everything ex Delta we've spoken about, is what we'll cover on the show today. So stay with us. But let's bring in Kush Bora. Kush, how are you viewing the moves in the market? Apologies for that.
Hi Harsh, hi Neeraj. Anyone planning a mid-week spontaneous holiday?
A good time to take it, right? Because
absolutely, absolutely. Neeraj, for the last 4 or 5 sessions, the markets have not gone anywhere. If you shut shop and then you started after a week or so, you'd still find the index at the same level, right? But yes, I mean, this is also a phase. This is also a phase that the market participants have to go through. So, yesterday we saw some signs of life in the market, but mind you, that was coinciding with the Sensex weekly expiry. I think the same thing could happen for Nifty. Tomorrow's the weekly expiry for Nifty. You could see some sort of a spike, some sort of an action. As of now, the data suggests further consolidation, PCR near 0.9. The pivot level, as we can see, is 25,500 because the call and the put congestion is very heavily at that strike price. So yes, I think consolidation par for the course. Some volatility could be seen perhaps tomorrow. But I think one thing that deserves a very special mention is actually the VIX. So if you'll recall on Monday, I did mention that VIX could slip to about 11.5 levels. We are nearly there. This is, mind you, if we close around these levels, this will be the 14-month low for VIX, at least on a closing basis. And we've seen VIX rebound from these levels. So maybe a VIX spike is around the corner because we've hit, significantly lower levels on the VIX. So, a VIX spike is around the corner. But I think we did also mention on Monday that not necessarily that every time VIX spikes, markets have to crash. They could go higher in tandem as well. So just something to put out there. For now, consolidation par for the core stock specific action, as you guys mentioned, plenty. So focus should be on that.
Okay, Kush, before we get to your ideas though, kudos on, a couple of ideas or a couple of things that you spoke about and which have worked well. So would want an update thereof. I believe you spoke about Lotus either yesterday or today, and that stock has done well. And I remember at about 630-40 odd rupees, you spoke about Marathon Next Gen. And that one too has rallied quite significantly. It may be flat today, but is above 700 now. So call on or updates on both of these, Kush.
First of all, thanks a ton, Neeraj, for remembering these and highlighting these. So yes, my positive view on Marathon, very much continues. It has seen excellent accumulation over the last 3 weeks, and the momentum indicators, despite the kind of run that it has seen in the last 4 to 5 weeks, are still very heavy. Some indicators suggesting further upside as well. So if I had a position, I would very much continue to hold a Marathon for levels of 750, 785 and higher levels. Now, if you did take into consideration, the discussions that we had and took a position in Marathon, I would recommend, a trailing stop loss near the 690, 685 zone. That will be the support zone for Marathon. Lotus was something on our radar, didn't really convert as a call, but yesterday, yes, right, like you rightly said, it did stand out in the, in the pharma pack, primarily because of the volume action. I focused more on that. Even yesterday, when the stock was consolidating, the volume wasn't really as high. So even the negative bias was with a lower volume. Today, we are seeing a further breakout. Now, I think is a time to book profits in Lotus for 2 reasons. One, the 800 resistance will act up. You already see, call congestion near the 800, 820 zone. And the stock has been trading in overheated territories for the last 4 to 5 sessions. So yes, if you did have a position, even if you had, if you took a position considering yesterday's discussion, not a bad idea to take money off the table. Any decline towards the 755, 760 zone should be considered a re-entry.
Okay. Kush, picks for this afternoon?
Sure, Harsh. Two of them, both on the long side. Let's start with Cummins. Very, very good, volume action on this one. Last 3 days, the accumulation has been above average. It did give a breakout yesterday above the 3450 mark. The rounding bottom formation breakout. Today, you're seeing a continuation of that. I think higher levels are very much in line for Cummins. In fact, some of the other peers also. So 3560, 3640 are your targets. 3400 is where you place that stop loss. Cement pack also, after a brief period of consolidation, in some cases profit booking is starting to show signs of an uptick. Ramco Cement stands out for me. From a near-term perspective, 1130, 1160 are your targets. 1070 is where you place that stop loss.
Okay. Kush, I wonder if you have a view with regard to a couple of auto counters. One is an SML Isuzu and one is a Force Motors. Give us your thoughts, because the moves over there are very strong, at least maybe over the last month or so.
So Harsh, this is one train that even I missed, was on my radar for some time, but the moves on SML Isuzu in particular have been so sharp that they never really gave a chance to initiate a call. Now the stocks actually hit overheated territories. It's still going higher. So how you typically play a momentum trade is you either book partial profits and hold the rest, or you put trailing stop losses and continue to hold. So no fresh trade recommendations for SML Isuzu weekly, daily setups. Both, if you see the stocks run up, quite sharply, despite it still gaining volume and price action, the risk reward ratio for a fresh trade will not be favorable. So you could continue to hold and ride this momentum wave. 2850 is where you place that stop loss. Force Motors, on the other hand, very interesting. I think this is a time to accumulate Force Motors that you've missed out on the last few occasions. If you see from April onwards, every time the stock has dipped towards the 20-day moving average, it's rebounded and quite smartly. Even now, if you see 3 sessions ago, the stock almost tested the 20-day moving average and has rebounded. Today, the volumes have spiked up quite a bit. So yes, Force Motors is one trade that you can consider. On the higher side, I'm looking at 17,250 and 17,800 as the next targets. And the support zone for this one is 16,200, 250, which was the earlier resistance level. So Force Motors, despite the kind of move that it's showing today, looks on a good footing.
Okay, Kush, stick with us. We'll go and we'll take views from market expert Nischal Maheshwari joining us at 2:10 today. Nischal, plenty happening with regard to global macros. One is, of course, tariffs, and tariffs impacting two sectors, at least in trade today. You have a pharma sector, which is surprisingly in the green, despite those tariffs, and maybe it's because of the push of implementation, at least over a year and a half or so. And the other one is commodities. Just talk to us a little bit about how you're viewing it, and do you view pharma as a potential buying opportunity at this point?
So, thanks for having me here. Good afternoon to you and your
Good
viewers.
afternoon. Good afternoon, Nischal.
So I think pharma, as you had said, basically the implementation is over next 1.5 years. Here, as far as tariffs are concerned, people are not aware for the next 24 hours. So what is the point on talking about 1.5 years the implementation is going to happen? Nobody really knows which way the pharma or what kind of tariffs is going to happen. And that's why I think the market is not given much credence to this thing. So I'm saying you will find one new tweet from the US president every day. So it's difficult to actually react on that unless it gets implemented. So I don't really bother about that part. It's 1.5 years or a year away. The other thing, as far as should we look at pharma from this point of view, I think individual stocks still continue to look good. I like the cramped space out there within the pharma sector. And that space, that China plus one story is really playing out. We have been in touch and spoken to several of these companies, and they are saying the inquiries have been disproportional now in the last 2 quarters than it was earlier. So I think definitely there is a very, very strong momentum for the cramp space as far as pharma is concerned.
Okay, so cramps within pharma, healthcare at all, and more domestic facing, but healthcare at all on your radar as well, Nischal. There has been some centers of the market which seem to suggest that healthcare has run up and probably run up disproportionately. What side of the camp do you sit on?
Yeah, I do agree with them basically that healthcare is right now basically on the higher side of the valuation matrix. So one should wait for it. But having said that, I think healthcare is a industry basically like pharma, which is going to continue to grow at around 10 to 12% CAGR for the next several years. Because India is a hugely underpenetrated market, and definitely healthcare is one place basically one should be invested in. But wait for a better pricing basically to get into it.
And how would you play healthcare once that pricing arrives?
So I would like to play through the hospitals, maybe to an extent diagnostic chains, but largely through hospitals basically.
Interesting. Nishchal, the other piece is, and good afternoon, of course, great talking to you. The other piece is in a difficult or a fast changing, let me requalify, fast changing and a fast developing news heavy period that we are in right now, as you rightly said, a tweet a day. You probably try and look for themes which have some certainty. And when I think about it, the spends on defense or the targets set for energy transition and renewable energy seem to be ones which have got a slightly longer lasting piece to themselves, right? So let me choose energy transition and try and understand from you. How convinced or not convinced are you about the growth versus the valuation argument in the energy transition space? Solar, wind, equipment, what have you?
Afternoon, Neeraj. Thanks for having me on the show. Yes, energy transition is a big one basically. Now the question remains to be how and what you play out there. Because if you really look at, let's consider first solar. And solar, I think the equipment side, basically, I think it's been overplayed already. There is huge capacity, or rather an overcapacity already in the system, basically for the modules. Slowly, the cell manufacturing capacity is also catching up. I think, if I'm not wrong, by 2027, even the cell manufacturing capacity is going to get there fully, or it will be over the demand. So both the sides, as far as the equipment is concerned, basically, I don't think so. There is much play left. Yes, there are the growth will still be there. There is no doubt about that. But the valuations have just run much ahead of any growth matrix. And you have yet to see basically the two large players coming into the Indian market. So Reliance has started selling its modules from the last quarter. And you will continue to see Reliance, by the way, is going to have the largest capacity, both modules and then the cell manufacturing. And it goes back towards basically even the chip also basically to be manufactured here. So I think Reliance is going to be the most integrated player, the largest player, and that has entered the market. So I believe basically as far as the equipment is concerned, more or less it is all played out, and the valuations are quite aggressive out there. So that is one part of the solar. The second thing is wind still continues to remain very interesting. Because the wind capacity, yes, the growth may not be the same as solar because you have constraint about where you are able to put up the wind turbines. But then you have only 2 or 3 manufacturers of the equipment. And as and when, if you really look at it in case of all these manufacturers, the bigger part slowly the big part is becoming basically the servicing revenues. And that is quite substantial, and the margins are quite high on that. So I would actually like to, at this point of time, look to add maybe on the wind side rather than on the solar side.
But so are the equipment players trading at decent valuations, Nishchal? I mean, in the sense, Suzlon is no longer at 85, Inox Wind is no longer at whatever 230 or whatever, but not cheap, right? Or are they okay?
So they are not cheap, but then they are sort of a duopoly kind of a situation. So whatever happens, and they are giving a tough competition to the Chinese imports. And given that the complexity of the equipment, you definitely require somebody who's there on the ground. So that's why these two guys have been winning over the Chinese equipment, the German equipment and all, because the servicing part, the availability of repairs and all, I think these two definitely have an edge.
Nichal, do you find better value within the power play of sorts, but would you find better value in other spaces within power? Transmission equipment, energy exchanges and IEX and the like? Would power financiers be an option? Would those pockets be a better way to participate in power? And just rank them for us so that we get a better perspective or a better lens into how you think of it.
So my top pick basically even before the equipment is the transmission and distribution space. That remains to be my top pick basically in that. And I think given that there are at least for the next 3 to 4 years, Power Grid has actually gone out and said that they are going to be spending close to around 40,000 crores a year in the capex. I think there is a huge runway for all the T&D players, especially the EPC guys. So that space remains to be very good, and especially the evacuation of the solar that requires new lines to be laid up. And the third part remains to be that the upscale of the transmission infrastructure itself. India largely has 220 or 440 kV lines. That is now getting upgraded to 750 and 830 kV. So you will see that kind of infrastructure upgrade also happening. The second part is basically the transformer manufacturers. And there, the only thing remains to be that there is a global shortage. And that's why that sector still continues to do well. But otherwise, it doesn't have a very great moat. But I would actually prefer the T&D as a first space, transformers for the moment, and then the equipment suppliers of the wind. That's the way basically I would look at.
Okay, great. And if I were to just completely shift tack towards FMCG, because that's one of the big buzzers this week, and there's plenty of buzz that we will see recovery within some of these names. We have the likes of an Asian Paints and HUL. There's a Jefferies note today which says that some of these have corrected 25-30%. Great opportunity to buy. How do you see it?
It's a difficult call, basically. Okay. Yes, you have a trading opportunity out here. But if you are really asking me, basically, would I own one of these stocks basically in my portfolio for long term as an investment bet? I don't think so. Each of these guys, we really look at it, I don't see they are doing more than 10-12% kind of even 10-12 would be an aggressive this thing. For multiple years, I don't see them growing in volume terms, basically 5, 6, 7%, and value terms, maybe total top line growth of around 10 to 12%. So for that kind of a growth, basically you are paying, and they are not cheap. All of them are 40, 45 times still. So that is the conundrum basically which I have.
Right. So Nishal, sorry for interrupting. Where within the value chain in FMCG do you see value therefore? Both growth as well as a decent multiple?
So growth, I would still say basically there are pockets, but multiples, I think within FMCG as well as if I would include even the distribution side, which is the DMarts and trends of this world, basically valuation is not a comfort at all. But there at least the growth is there. So that is the only way I would look at it. But FMCG to me is like a more of a trading play.
Okay, all right. So that's the way Nishal thinks of quite a few things within the market. We discussed 3 sectors. Thanks so much for those views, Nishal, for coming in and speaking with us. Always a pleasure. So pharma, power, and FMCG. Those were the 3 plays we spoke to him about. But what we'll do is we'll slip into a very, very short break. On the other side, we'll have Heard on the Street, of course, and we'll start talking about a couple of specific stocks. Stock of the day is what we'll get you on the other side of Heard on the Street as well. Stay tuned.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need straight from the expert.
All right, back with India market close and a few stocks which are moving well. We've been talking about Belrise all these days. Aegis Vopak Terminals, which came at the IPO at almost the same time, today, after a long time, is showing some spark. It's up about 4%. So keep that stock on your radar as well. On a day when the indices are absolutely flat, we want to look at specific movers and what they are doing. Kush, very quickly though, the capital market plays and BSC, MCX, Angel One, today 361 is down. Any thoughts there? And if not there, Metropolis, which is surging and is now the top gainer on the Nifty 500, nearing 2,000. Thoughts on that one?
So, Neeraj, I think some of these names, will rebound. I think, the markets are just waiting for the matter to get settled. The capital markets play, I think. Once that settles, I think, the upswing will anyway begin. But just to put things in context, if you look at the moves that, BSE had made, somewhere late March, early April, and despite the correction that it's had in the recent days also, it's not even corrected, like the full 38%, which is a key, key level in the Fibonacci series. So there is still some support that's already kicking in for BSE. So I remain very constructive on BSE. Yesterday, I did mention that, if you want to pick, then CDSL is something that you can start, investing in with the kind of profit booking and sideways consolidation that you've already seen. BSE just at, today's perhaps the first day in 2-3 sessions where, it's starting to see support. So if the selling is over, then you could start looking at BSE. Just give it a couple more days for matter to settle. CDSL, some of the other names looking attractive, not too keen on broking firms like Angel. as far as Metropolis goes, it's had a good run. It's seen a vertical rise. Now it's into overheated territories, so it's time to book profit. So if you did have a position, not a bad idea to take money off the table from Metropolis.
Okay, all right. So that's the view coming in on some of those names. But let's bring in that time on the show 2:30. We bring in Somit Sarkar, who joins us with all of the chatter that he's picking up from dealing room in the segment Heard on the Street. Somit, what are you picking up?
Well, multiple stocks, in fact, today in focus that are there. Firstly, this stock in focus is Adani Power. Now, dealers are indicating that there are buy flows on the large HNI desk on anticipation of some positive corporate action that could come in the stock. Second on the list is a couple of stocks, Engineers India and ICICI Pru Life. Dealers are indicating that there are buy flows on DI desk in both the counters in trade today. So keep an eye out for ICICI Pru and Engineers India. For Sambhav Steel, there are buy flows on HNI desk on anticipation of strong earnings that the company is expected to report. And related to earnings, on the downside, it's Persistent System and Tata Elxsi. There are sell flows on expectation of weak earnings that could come in from both these IT companies. For Medi Assist, dealers are indicating a large long-only foreign fund has started accumulating this counter. So keep an eye out for Medi Assist. Obviously, it's a long-only fund. It could be for long-term. This stock could react in a positive manner going forward. And lastly, it's BHEL. There are strong buy flows on the large HNI desk. Dealers are anticipating that there could be some order win announcement and some positive news that could come in for BHEL going forward. So keep an eye out for BHEL as well.
Wow, that's a lot of stocks. And interestingly, BHEL won, yes, but also the fact that, or the possibility of weak earnings from Persistent as well as Tata Elxsi.
Right. Also, we had pointed out this stock, Orient Pro Solution, on Monday, that there could be a potential order win announcement, and that has come in today. They have got a digital banking order from Africa. So that is one more thing.
Yes, saw that today as part of the news that was trickling through. What is Zoran? Okay, so 0.5% higher on the back of that order win.
But this is interesting. Somit, thanks for that. And Kush, come in, do the charts indicate any weakness for a Persistent or a Tata Elxsi?
They do, in fact. There has been a steady downtick in a lot of IT names, the large caps for sure, but even something like Persistent has come in, a bear clutch and, seeing profit booking. Right now, it's the 200-day moving average around the 5,700 mark, which is just giving it support. If that is broken, then you could see further downtick, close to 5550 levels also. The two stocks that stand out in this space, Coforge and BSOFT, for slightly different reasons. Coforge has had a good run, is seeing marginal profit booking, and this uptrend could continue. BSOFT is actually on the way to recovery, and perhaps could have a catch-up trade coming in. So these are the two names that stand out. But other than that, most of the large caps and now even Persistent seeing a bit of a downturn for some days, and no letting off, apparent, at least on the charts right now.
Okay. Mr. G. Chokalingam also joining us, founder and MD at Economics Research. Mr. Chokalingam, welcome. Good afternoon. Just trying to get a grip of things from you, how you're looking at the markets at this point. We're in a sort of consolidation band of sorts. What are you liking in this market at this point?
Yeah. So I think the market is waiting for US-India deal. That's why it's consolidating. Point two, I am very bullish even in the short term. Unless something goes wrong with the trade deal between India and US, I think within 3 to 4 5 months, we will create another record high level of Sensex and Nifty. That is my strong view. Because growth story is there, monsoon is too good. There are many more. I don't want to take much of your time. And what do I like? I continue to like PSU banking stocks. Yes, industry credit growth has come down. There is a pressure on the margin. Stocks also corrected, but I remain very bullish. I am sure with the reversal of interest rate cycle, the lending would pick up. With a good monsoon, even the agri credit would pick up, and PSU banks would do well. And I am very bullish on small and mid cap segment as a whole. However, I would suggest the investors not to lose the valuation comfort, because we have already recovered 3/4 of the losses we saw in February 2025. We had lost about 100 lakh crore from September 2024 peak. From there, we have recovered 3-4, and a lot of stocks are rallying. And yes, this is very optimistic outlook, but one has to be cautious on individual stock valuation.
Okay. Well, Mr. Chokalingam, just one very quick view. Could there be weak results do you anticipate with the Persistent, Tata Elxsi, or some of these non-Nifty IT companies? If you had them in your portfolio, would you sell them or would you hold on?
I would not hold them. I would sell. I've been saying that the industry is growing only at 2 to 4% in dollar term, and most of the names, except Coforge, all other names you mentioned, they are stagnating. They are showing stagnation in the profit or even degrowth. So they don't deserve 40 to 50 PE when the profits are stagnating or degrowing. But of course, Persistence is an exception. It's been doing quite well. So except stocks like Persistent and Cyient, I would sell most of the IT stocks.
Okay, so that's with regard to IT. Mr. Chokalingam, clearly not bullish with regard to IT, but it's time to talk about the stock of the day, and that one is PCBL, Philip Carbon Black. The counter is buzzing on the back of anticipated supply disruption of carbon black as the leading supplier plans to cease production in several plants. Varsha here to contextualize it. Varsha, 5% higher on PCBL, warranted?
Yes, so thank you for that. So as you rightly said, the global specialty carbon manufacturer, that is Orion, has plans to stop its production at 3 to 5 carbon lines. Another discontinuation is planned in in 2025. Orion, if you see, total has 15 facilities, 11 of them is in America. Now, Indian carbon black players are in focus. You take PCBL plus Himadri Specialty also. They are also into carbon black, but talking about PCBL, so they are India's largest carbon black producer. Now carbon black is nothing but a fine black powder which gives color and is also used as a reinforcing and agent. So it's crucial in tires and rubber products and also in plastics. Now, why PCBL is in focus? Because if the global player is shutting down few of the facilities, of course, Indian manufacturers will benefit out of that. So, if I want to talk about the capacity details when it comes to PCBL, the total carbon black production capacity stands at around 7,90,000 metric tons per annum, and they aim to reach 8,80,000 metric tons per annum by FY26 and 1 lakh metric tons per annum capacity by FY28. That's the target that they have. Also, please remember that PCBL is one such stock which is gonna gain in margin perspective also because of the higher sale of specialty carbon black as well. That is a value derivative products that we may call. Lastly, on the margin guidance, if I were to talk about the current carbon black EBITDA per ton, if you see metric per ton is almost 17,665 in Q4. The long-term guidance that they have given is 25,000 per metric ton. That's the EBITDA that they are targeting. So huge growth when it comes to EBITDA. Now this is also, as I said, that because they are moving towards the value-added products which gains higher EBITDA per ton, and also because of the specialty and superconductive grades will also aid to margin expansion, and also the few of acquisition that the company has made will also help when it comes to growth for the company. So overall, yes, positive news for PCBL as such.
Okay, so positive news. Kush, thank you so much, Varsha. Kush, what's your take with regard to PCBL on charts?
Fairly positive. The stock was in a downturn for the last 7 odd sessions, and today it's given a breakout on the back of this news, on the back of very good volumes. It's right now above the 200-day moving average, which comes close to the 419, 421 mark. A closing above this will actually start a fresh uptrend for the stock, where 445 and about 465 will become your next targets, and the support zone for this one comes at 410. If you had a position, continue to hold. If not, a closing above, the 200-day moving average could, as I said, start a new trend. So you could consider a long trade even now if you didn't have a position. So all in all, fairly positive on PCBL.
Okay, so that's on PCBL. Mr. Chokalingam, do you have a view with regard to the sector as well as the stock?
Yeah, definitely we used to cover it. Carbon black has perennially very robust demand because the main user industry is the tire industry, and replacement market accounts for almost 2/3 of the total tire demand. So therefore, the demand outlook for tire industry remains robust, and hence the demand for carbon black also remains very robust. So this is almost a leader or top two player in carbon black, and with a lot of expansion in the place. It's a good stock for long term, but in the short term, I would have a little apprehension because on FY25 it is trading at around 38 PE. So I wonder whether one can pay that kind of PE for a commodity business, though they are getting into value-added carbon black, but still it is not a high-tech chemical product. So therefore, I would be comfortable to hold it for long term, and in case it corrects below 400, then I would find it relatively quite attractive.
So wait till 400, cautious with regard to PCBL on fundamentals, but we're speaking about commodities. Copper's the other one in focus. Let's pull up a Hindustan Copper. Let's also pull up a Hindalco. The LME prices have hit a high following Donald Trump's 50% tariff announcement. That may be a boon for domestic copper players, but a bane to copper consuming industries like cables. Despite that, you're seeing a bit of pressure across the board where both sides of the value chain are concerned. We spoke to KEI Industries earlier today about this. Listen into a slice of that.
So far as our business is concerned, but whenever the copper prices are rising, we are immediately passing it on to the users. And if it is dropping, we are also reducing our selling prices of our cables. So I think so far as we are concerned, it will have no impact, but any significant rise in copper price may impact the demand temporarily, because ultimately the user industry normally does wait and watch policy for some time if the prices goes up significantly.
Okay, all right. So that's of course with regard to KEI. We also in fact had a statement coming in from RR Kabel. We have Sri Gopal Kabra. And he's the managing director at RR Kabel, who suggested that there's no formal notification beyond the initial statement. Implementation and timeline remain unclear. Tariff on copper appears to be primarily focused on raw and refined forms. Clarity is still emerging with regard to whether value-added copper products like cables, transformers, wires, tubes, copper alloys will be included. Cathodes from countries like Japan will continue to find its way to the US warehouses in the near term as a result. And therefore, all of that stockpiling that's happening in the US will likely continue to happen till there is a definitive date from when this tariff will be applicable. Until that point, you might continue to see price pressure. That's what Rakesh Arora told us this morning with regard to where copper is concerned. But thereafter, you might well see pricing come off, which might trigger some bit of pessimism in some of these companies.
At least that's what that general focus seems to be, right? And you had done some work on this as well. But Rakesh's view was that this is a short-term impact either side, which will normalize in a period of 1-2 months once the tariffs actually come into place.
Yeah, and in fact, what we're going to try to do is pull out that piece by Rakesh Arora. Here are his views. Listen in.
The street was expecting around 25% tariff on copper import by US. So 50% has come as a surprise. That's why you see a 10% jump in copper prices. If I look at overall copper consumption in 2025, China has been building solar power like there's no tomorrow. And just to give you some numbers, in the first 5 months, China has added 105 gigawatt. Now that is equal to India's total solar capacity. So that gives you, a lot of color. US added around 10 odd gigawatt in the first quarter. And this was down like 7%. China was up 150%. So what is happening is that, we have strong demand growth coming in China for copper, which is growing at around 13%. And because of the tariff, the inventory is all moving towards US. So rest of the world is left with much lower inventory. When you club the inventory of US and rest of the world, it is probably higher than what it was in 2024. But since everything is rushing to US, the rest of the world is seeing much lower inventory, and that's why the prices are moving up. this phenomena will last for some time because US demand is not there enough to support that kind of inflow. So you will see bump up in copper prices in the near term. We're already seeing that, and probably in 1 or 2 quarters as things settle down, copper will start to come back to below $10,000 level.
Okay, well, Kush, so if I try to piece this together, fundamentally, we've gotten a couple of views. Technically, what do the charts say for a Hind Copper, for a KAI Industries or a Polycab? Any thoughts?
Sure. So Neeraj, Hind Copper was, our call about 10, 15 odd sessions ago, had done well. And, metal names are no stranger to volatility, especially, on account of global news flow. And this is also something very similar playing out. So for me, Hind Copper remains a buy on declines. It's just that, it's taken the support at the 255, 260 zone, which is a rising trend line support for Hind Copper. Give it a day. If it holds about, if it holds around these levels, then I will actually look for a buying opportunity in something like a Hind Copper. Anyway, the 200-day moving average support at 255, a strong one, and that comes in. So yes, I remain constructive on Hind Copper. In fact, even Hindalco for that matter. But I prefer Hind Copper over Hindalco. Among the wire names, most of them don't have a very encouraging setup. I was looking at Finolex, KEIRR, Kabil. They've anyway been consolidating for the last 8-10 odd sessions without really going anywhere, perhaps with a mild negative bias. The only one that stands out in this case is Polycab. Had a good run, few days of consolidation. Today also, if you see, despite the kind of news and the kind of dip that the stock is witnessing, it's still holding up above yesterday's low price. So for me, Polycab is a buy. 6,900, 7,100 on the upside, remain the key levels to watch for, and 6,500 as a stop. So Polycab in the wire space and Hind Copper in the metal space still look good. Hind Copper, I'd give it a day or two more just to see if it settles around these levels.
That's the take coming in with regard to some of those commodity names. But let's take a look at some of the other stocks which are in focus. My colleague Jasmeet joins us with the details with regard to 3 of those. Jasmeet, 3 stocks. Take it away.
Well, right. The first one is Tata Steels. The company has come up with the business update. So here's all the information required. While in terms of production volume, if we see, the Indian production volume has seen a degrowth of minus 3.3%. While on the other hand, the Netherlands production have seen a positive 6.3% growth, and the Thailand has seen a positive 3.3% in terms of production. While when we look at the delivery side of the business, we see Tata Steel has seen a degrowth of 15% for Q1 FY26, while the Netherlands has seen a 14% degrowth. On the other hand, Thailand has seen a muted 3% growth, you may say. While the reason behind this degrowth is maintenance related shutdown in Jamshedpur and Neelachal Nigam Limited. The second stock in my watch list is Bejal Projects. While the company has planned on capacity addition for around 170 crore at Rajnol facility. The capacity is used in demand given that company has increased the demand from Indian and domestic markets. While company to increase its capitalization by almost double to 1.1 lakh MTPA from currently 40,500 MTPA. While the new capacity addition will be between Q4 of FY26 up until Q4 of FY27. The current existing capacity stands at 98%, while the financing for this particular project is to be done by internal accruals. Company's recent updates also include company winning a mega order from Power Grid. The mega order basically ranges between 300 to 400 crore, and the order was for construction of transmission lines of up to 99 kilometers. While company's order book as of March 25 stands at 2,900 odd crores, while book-to-bill ratio stands at 3.7x as of March 25. The last one on my list is ELGI Equipment. The stock is buzzing and is up 4% in trade today, as the stock had a bulk deal yesterday, while the 30-day volume average of the stock is at 6 times today. The bulk deal was done by SBI Mutual Fund, where they bought in roughly 18 lakh shares at 532 rupees a piece. This roughly forms up to 0.5% of total equity. So these are the stocks to watch and keep on your radar. It'll also be interesting to watch out how does the Q1 turns out for all these companies.
Interesting to watch out. Q1 is what we will have our focus on. But Mr. Chokalingam, do you have a view with regard to Tata Steel, both from a valuation perspective? We've seen a bit of a run up from those lows of 140 or even lower rather, but in the near term it's been a 140 low. We've seen a good bounce. How do you view it? And how do you view the production numbers, the debt reduction plans, all of that? Give us perspective.
Yeah. More than production, the actual delivery volume would matter as far as the financial numbers are concerned, Q1. So which is going to be impacted, as your colleague has put out, that majority of the cases, the delivery volume is in negative zone. And secondly, ultimately, there is going to be net increase in the tariff by the US, and which is going to impact a lot of countries. The degree may vary, but the fact is that most major economies are going to be affected because of this US tariff. Therefore, the global growth will come down. Chinese growth also will come down. So, which is going to be negative for steel and other metals. So, therefore, in this kind of economic environment, I would avoid Tata Steel.
Okay, so that's the rationale behind Tata Steel. Very, very fair rationale. Kush, any of these counters on your radar? A Tata Steel, a Bajaj, I believe the third one was an LG. All three of them buzzing. Any of them on your radar?
And LG stands out near to a month and a half's high level 200-day moving average resistance also being taken out, assuming that it closes around this level. So a new uptrend could very well start on an LG equipment. Take a positional bet on this one because seems to be starting a fresh leg of up move. So your targets on the higher side for this one will be 580 and about 610. And on the downside, you're looking at supports near the 520, 525 mark. So that should act as a stop loss. So yes, a good move on this one, volume backed and taking out key resistance levels. So LG equipment, could be considered for a positional trade.
Okay, so LG is something that Kush seems to like. Let's though switch focus. SML Isuzu. This is a stock where the rally just doesn't seem to get done, and it's a bit of a puzzle, if I can say so. But we have Puneet here to break it down. Puneet, what's contributing to the kind of move that the stock has seen? Just look at that 82% move in the last 3 months. Break this down for us.
Well, thank you for that. It's definitely M&M's acquisition of the company being one of the clear cases of the bull run on SML, but it's definitely a curious case, and that's because we want to look at 3 key numbers. When the company was acquired, it was around 1500. The open offer price is 1554 rupees per share. M&M has actually acquired the company at 650 rupees a share on 28th of April, and the current market price of 3000 rupees. So it's a differential. From the acquisition price of M&M, it's almost up 4.4 to 4.5 times in just the last 3 months, and from the open offer price, it's almost doubled in the similar time frame. So that's one of the key aspects that made us look more deeper into what's happening actually with the company as well. So we want to look at 3 key aspects. The first one's what actually has changed in the last 3 months, and the straight answer is nothing in terms of that warrants almost an 80% rally on the stock. The key aspect within these time frames, there has been a few updates. The quarter 4 results were decent performance, 12 to 13% revenue growth by the company. Margins also grew by 190 basis points to come in at almost 12 to 13%. Those were positives. Sales as well on the other hand has been decent, a 12 to 13% growth in quarter 1 is what the company reported. But does this warrant an 80% jump? Well, not so much, and that's why it's a curious case as we highlighted. The second aspect, what is actually M&M's plan with SML Isuzu and what made them acquire the company? M&M largely operates in the 2 to 3.5 ton space, which is the weightage of the truck, and the higher the weightage and the higher the tonnage, the more weight it can carry for goods transportation. So it's largely niche in the 2 to 3.5 ton space. On the other hand, someone like an SML operates in the 6.5 to 9.5 ton range. So it's a brand new category that M&M gets, and with that, they've now doubled their market share to 6%. The company is now planning to double it again by FY31 and almost 20%, effectively catering to 1/5 of the market by FY36. That's the second key aspect of what is M&M's plan. And finally, in terms of who are the public shareholders, now almost the key aspect also before I go to the shareholders actually is important of will M&M actually revise its open offer price. Now, according to the rules, there's actually no compulsion for M&M to do that. I mentioned it's almost double than the open offer price. From a high, this may actually deter some of the public shareholders to actually sell out in a lower price of 1554 rupees per share. So it might actually help M&M reduce the cost of the acquisition. But yes, they will not get the kind of stake they would have envisaged. But currently, they've spent 555 crores in acquiring the promoter stake. The total acquisition cost was expected to be 1100 crores. So it'll be much lower than that aspect. Finally, in terms of shareholders, we know that Sachin Bansal is a co-founder of Flipkart. 19.4% stake is what he holds, but there's no mutual fund, no insurance, no FIS, no DIS in the holdings for SML Isuzu. So it's largely retail public that holds the stake as well. What's next for SML Isuzu shareholders? Open offer dates are still pending. We're still awaiting those details. The CCI approval came on 17 June, so we might expect it to come sometime in the near future, very closely in the short term. But the 12-month forward PE has now inched to 49 times price to earning versus the last 2-year average of 31. So that's largely because of the rally we've seen, but it's a cautionary tale for retail and minority investors. They should stay cautious and look to have all their research before entering the stock at this point of time. But it's very cautionary to enter at such high valuations for the company for a 4,000 crore market cap as well. So that's the curious case of SML Isuzu. Definitely a long-term positive for M&M as well as SML in going forward as well.
Thanks a lot for that, Puneet and Kush Bora. We'll take in Mr. Chokalingam's view on this one after the break. But Kush, before we thank you, do the charts suggest more upside here?
Well, given how the volumes have perked up today as well, despite the kind of good run that it had until yesterday as well or this morning, I wouldn't rule out a further upside. 32.50, the high that it touched today could be retested if that is taken out 33.50 as well. But yes, I mean, I agree to what Puneet is saying that, you have to be very, very mindful of whether you want to take a position at this juncture or not. My clear advice is no, because the risk reward ratio is just not favorable. It's had a good run. Momentum could take it higher, but you don't want to enter at these elevated levels and then, perhaps see much lower levels. So wait for a dip if at all you want to get in. And if you do have a position, it's not a bad idea to book 50% now and maybe hold the rest.
Okay, we'll take a break. Kush Bora, we'll leave it at that. Thanks much for taking the time out and joining us. Mr. Chokalingam, stay on. We'll be right back.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
Back with India Market Close right here on NDTV Profit, in conversation with G. Chokalingam, and joining us is Shivangi Sarda as well. But just before we go to Shivangi, Mr. Chokalingam, like I said before the break, wanted to tie off this loose end with you. SML Isuzu, what a meteoric rise for the stock. Have you looked at the valuations and the fundamentals? And if you had it in your portfolio, would you keep it? Why or why not?
Yeah, so definitely I have studied it. And before that, I thank your anchor. He has covered very nicely in the interest of the retail investors. Deeply appreciate. You asked me if I hold it, what I would do. I would offload everything today if I am holding it. In fact, if I am Mr. Anand Mahindra and the rules allows me to do this, I would sell whatever I bought from this Japanese player in the market, and I would love retail investors to manage the company at this valuation. Coming to the specific valuation, now it is trading at around 37 PE, whereas M&M trades at around 33 PE on FY25 numbers. So it's costlier than the company which is acquiring it, and I don't find any fundamental comfort at all. This is a good sell at this price. That's my view.
Very interesting. What about Force Motors? If I can also throw in that question, Mr. Chokalingam, that's also had a very stellar rise.
Yeah, honestly, I have not studied numbers.
Sure.
So, yeah.
Sure. Puneet, do you have a view with regard to Force Motors?
I think it's largely become a very big re-rating candidate, Harsh, and that's one of the key aspects about it. We'll get to the bull and bear in just a bit, but for Force Motors is because the last year was a slow year in terms of sales, and now that over the last 3 to 4 months, the outlook for FY26 and 27 became so pertinent with the new Urbania amongst others. I think that's why it became a re-rating trigger, and I think market got ahead of a little bit before even the results came in. So the last 3 months, I think the chart also would show a very stellar growth for the company, but likely and largely a re-rating trigger, and putting in that kind of valuation on what should have been because of the strong product profile developed over the last few months. So you're seeing that almost 100% rise in the last 3 months, even before the Q1 results have come in, Harsh, and that's largely because of the outlook that's expected for FY26.
Okay, so that's with regard to a Force Motors. Shivangi, can I pursue you for a view with regard to Force Motors?
Yes, Harsh. So looking at the chart structure of this one, you've seen that although technically speaking, there is a price volume surge today, but this one has, shown that, after the breakout, it does take a little bit of a pause and consolidation in the past. So we'll wait for some consolidation at these levels, and then, we can go for fresh buying. But it needs to hold above 16,500 odd levels for this strength to continue.
Shivangi, are you taking a trade on the index at all? And if not, what are the stock ideas for the afternoon?
Neeraj, the index has been very volatile in a very consolidative band. So within a tight range, we've seen whipsaws and tug of war between the bulls and bears. Even though there is a strong, buying at the support levels from the bulls, somewhere or the other, it's facing resistance near about 25,550 marks, which, even yesterday it could not surpass. So this level would be important to watch out for tomorrow's expiry. But of course, buy on decline to continue over here. We've seen that the time TK was a lot faster today in terms of the option premiums, probably because, of course, that India VIX has sunk below 12. So overall, there will be some whipsaws in the option premium as well. But structure remains positive. We are still holding on to higher top, higher bottom on the daily basis, and buy on decline to continue for 25,800 marks for Nifty, with a support of 25,350 levels. And talking about stock-specific ideas, first up on my radar is Laurus Labs. We've seen a lot of momentum and buying in the pharma and diagnostic space stocks, and Laurus Labs has come out of its consolidation on the daily frame. And this one has particularly, given a good follow-up after the monthly breakout that it showed in the month of June. And we've seen consistent returns here. From the last 3 years, the stock has poised to be a very good one. So I remember, recommending Laurus Labs even the last time I was in a show with you. So those targets have been achieved. We are trailing these targets and stop losses ahead. The next levels that we're looking at is 825 with a stop loss of 777. The second one on my radar is ITC Hotels. We've seen that this one has given a price volume surge today, but more importantly, since inception, we've seen that this stock has been making higher top, higher bottom on the monthly basis. And even on the daily frame, it's been holding on to its 50 DEMA very well as a support zones. And in fact, ITC hotel chains have clocked around 73% occupancy on an average in FY25. And its recent asset-light expansion drive is also looking good for a scalable growth without, over-leveraging itself. So overall, quite well placed, and all these positive momentums are coupled with the price movements that we've seen. So recommending a buy here. The next targets that we're looking at is 235 with a stop loss of 222.
Those are topics coming in from Shivangi at this hour, but bull versus bear as well in this segment. Sirma SGS is the one in the spotlight. Puneet has been here. We've asked him various questions, but he's here for bull versus bear finally. Puneet.
Well, thank you for that. So the key trigger on these EMS stocks was, the report from JP Morgan initiating coverage on a bunch of stocks. 6 stocks is what they've initiated coverage on. They have an overweight rating on Sirma, and we've picked that one today. It was one of the biggest gainers in today's trading session. We've seen some cool off from that level. But the interesting part of what the brokers said is that they look at Sirma as one of the dark horses essentially, and seeing a 31% revenue CAGR over FY25 to 28. They do see higher revenue growth for the other players, and we'll get to that in just a bit. But putting Sirma as one of the top 3 instead of something like an Amber, which is a consensus choice, was one of the most interesting aspects of this particular report as well. Now, on the other hand, we're seeing some, bearish views coming in from likes of Morgan Stanley. Post quarter 4, they mentioned that the turnaround initiatives for Sirma, while positive, might take a little longer to fructify, and hence maintaining the bearish view. They have a target price of just about 435 rupees per share, almost 50% below the current market price. But that's one of the divergences in views of these two brokerages. When you look at the second bull and bear case, it's of course one of the key aspects of exports. Now, amongst the EMS players, Sirma has one of the highest export revenue percentage of 30%. For FY25, and the bull case estimate is that JP Morgan also believes, amongst others, that it's still not built into the current consensus estimates, and hence they feel it's something that's not yet put in the numbers, and it could see earnings upgrade because of the strong export push for the company. On the other hand, the 30 to 35% guidance, while strong, is still lower than the other EMS players. For Keynes Technologies, it's 60% revenue growth is what they are seeing, while for Dixon, brokerages are anticipating a 70% revenue growth in FY26. So it's still lower than the other players, and that's the second bear case. The third one is margin boost. Now, they are reducing the share of the consumer business to 30% from 40% currently, and that is expected to boost margins. Currently, it hovers between 7.5% to 8%, and that's expected to inch up to 9% for something like a Sirma SGS. But of the current order book of 5,300 odd crores, the consumer business still forms almost 1/3 of that number. So it might take some more time. The company's actually already started to go back to these set customers, renegotiate terms on margins or adding more value to these products. So that could take some time, and goes back to our previous point that these measures, while positive, might take a little longer to fructify as well. And finally, on valuations, it's trading at 35 times FY27 price to earnings. It's one of the cheapest amongst the EMS players, but again, the growth is where the key aspect is. For Keynes, it's 60%. That's almost double than that of something like a Sirma. So that begs the question of how much could you pay? How much do you want to pay as an investor for Sirma as of today, when the growth for the other players are higher? But it could be one of those candidates that's right now not valued at that valuation, but could be, because of the turnaround measures, one of the most interesting plays in the EMS sector going forward over the next couple of years.
Okay. Thanks for that, Puneet. And Mr. Chokalingam, anything in this EMS space, most of the things are expensive, they're not cheap. Would you buy the growth or would you stay away from the pack?
No, I missed them. I regret, but I don't want to chase them at current valuations.
You wouldn't. Okay, fair call. Now, Shivangi, this morning when we were talking to Chandan, he spoke about delivery as one of the ideas. It's done very well intraday today. My question to you is, his targets were about 425 odd, if I'm not wrong. So at the current levels, would you take some money off the table if you had done an intraday long or a positional long, or would you stay long? Conversely, the other question is, would you initiate a fresh long at the current levels on delivery?
We've of course seen a very good surge today, and even in the last hour, the stock has kind of jumped by more than 3.5%, which has been quite remarkable. So overall, we've seen that this one has a very strong support-based buying with follow-up even stronger. RSI is also showing signs of positiveness here. But of course, our first targets have nearly been met. I would recommend to trail stop loss over here. Fresh buying could actually wait for some more dips because the risk reward might not be as favorable. But we're looking at trailing these stop losses ahead. Maybe 415 would be an important support to watch out now for the next levels of 430.
Okay. Watching out for that as well. Some of the logistic companies, we've had some pretty strong moves. I remember in a Zinca Logistics before it did its QIP as well. So some of these logistic related buckets have looked interesting of late. Motilal Oswal has initiated coverage on delivery, by the way, with the target price, I think, of 480. So keep that in mind, currently about 423. Do you like any of these names, Mr. Chokalingam, the logistics and the delivery pack?
I am not comfortable in paying close to 100 P for delivery. I would rather buy Blue Dot.
100 P, okay. Fair call. So, I mean, essentially an expensive stock. I think, if I'm not wrong, I would love to just pull that out for a minute so that I can mention it. Yeah. So I think what Motilal Oswal seems to believe is that revenue will grow about 14% annually over the next 3 years. And they are valuing it at EV EBITDA of 36 times on FY28 expected multiples, as a result of which they are taking it, giving it a target price of 480. Actually, so it'll reach 36 times EV EBITDA on FY28 basis at the target price of 480. So bear that in mind. Okay, what else is moving? Let's try and figure out if there are stocks which are showing some moves. GIC Housing has had a bit of an uptick in the last few minutes of trade. Fino Payment, sharp up move in the last few minutes of trade. IEX, very sharp volume jump and a price jump as well. In fact, IEX should come up. It's still up about 3.5–4%, but more importantly, volumes are substantially higher than the 30-day average volumes. Shivangi, any thoughts on IEX? And if you don't track IEX, then give us a thought on MCX or BSE.
Yes, all the exchange-rated counters have grabbed attention and they're doing well. If you look at, MCX for that matter, we've seen that on a week-on-week basis, it's done quite well. It's a little bit of a pause right now, but the other names are looking, more attractive at this moment. Like CDSL is one stock which is looking quite good, which is getting ready for a fresh up move after the long consolidation of the last 8 trading sessions. Even BSE is showing signs of relief here because it's now negating its lower bottom formation, and risk reward is quite favorable at these levels for this one. So BSE and CDSL are to be watched out for.
Okay, so BSE and CDSL are a couple of capital market plays that one can look for. But Jefferies has come out with a note on consumer staples, backing the likes of an HUL, Asian Paints and a Varun Beverages. Arguably one of the notes, or rather the best notes in terms of stock price reaction today. Let's go across to Mahima for that one. Mahima.
Right, so Harsh, as you rightly mentioned, the note talks about 3 FMCG stocks which Jefferies is finding attractive in the entire consumer space right now. What they're saying is that FMCG as a sector as a whole has been grappling with subdued demand. The kind of price hikes that they've taken are not able to match the inflation, and in return what they're seeing is that because of that the premium products are not getting sold. It's the lower end of spectrum, the lower end of products that are seeing higher sales, because of which volumes are also getting impacted. Plus they've also said that overall margins have been under pressure because of rising inflation, plus there's rise in competition which is also impacting sales of something like an Asian Paints. Now because of all of these reasons combined together, a lot of these stocks have underperformed and have sharply fallen over 25 to 30% from its peak, and because of that Jeffrey thinks that there are 3 names that are offering reasonable attractive risk to reward with a limited downside. Now these 3 names include the first one being Varun Beverages. According to them, it is at an attractive valuation, and the target price that they've given is 560, which is around a 21% upside from its current market price. Then there is Asian Paints. They're saying that the competition that Birla Opus has already given was the initial competition and was easier to get that kind of market share, but now it will become difficult for Birla Opus to eat further market share. So they're saying that FY26 they'll see earning growth going forward. They've double upgraded the counter with a target price of 2830, and the last one is HUL with a target price of 2950. What they're liking is the kind of recent change in the management commentary that says that they will prefer growth over margin growth. That is something that Jefferies is liking about HUL. So these are the 3 counters that Jefferies is bullish on in the consumer space.
Mr. Chokalingam, thank you so much, Mahima, for that. Mr. Chokalingam, do you like consumer? If so, how would you play it? Do you believe that some of these counters warrant a turnaround?
I am negative. I mean, a couple of days back, the FMCG veteran also said, I forgot the name, the media interview.
Sir, sorry, but even Varun Beverages, you would be negative on that as well, because that's at least a place where there is some amount of growth. Just trying to understand. And what's the fear there? Give us your perspective.
No, Varun Beverages is relatively better, no doubt about it. I'm talking about a traditional FMCG player. In fact, we have a coverage on ITC, but I have a regret for that also. I would prefer if, something like a Jyoti Lab. Again, it is not going to show any double-digit growth in profit in the current year, but the enterprise value to branded sales is around 4 times for Jyoti Lab, whereas all other branded consumer plays are trading up to 6 to 9 times. And also the stock is beaten down close to 52-week low. So tactically one can look at a Jyoti Lab. Yes, Varun Beverage also one can hold if there is any decline buy, but otherwise I would stay away from most of the FMCG companies.
Okay, so would banks be a pocket you're liking at this point? And I'll pull out a couple of big buzzers today. Let's pull up a Fino Payment. Stock is up nearly 9%. And RBL Bank, where the stock is up 4%. Do you like a couple of those banking names or lenders? Fino is not technically a bank, but payment bank. Yes.
I have a bias for PSU banks. So I've been, apart from HDFC Bank, I've been focusing heavily on PSU banks. Like a Central Bank of India, Bank of Maharashtra, Canara Bank. Personally, we do not own, but we are more bullish on these banks.
Where growth is concerned, within the PSU banking pocket, there's Union Bank, which came out with numbers, not impressive. Yes, there have been a couple of banks which have been okay in terms of their growth. How do you view growth? Because you would start to now believe that the recovery cycle is starting to possibly fade for many of them, which will mean that there'll be a cap with regard to an ROA re-rating. So therefore, wouldn't growth come to the fore? But that's not happening clearly. So where's the concern, and why are you bullish?
Yeah, certainly. It's a good question. You are absolutely right. One or two quarters, they may have a problem as a category. But I have selected Bank of Maharashtra, which has already published the business numbers, which is far above the industry growth for Q1. And Central Bank has given a guidance recently that is again far above the industry growth. And they are all trading at attractive valuation. The single most reason, my perspective for 6 months to 1 year or beyond that, the single most reason to recommend this kind of a PSU bank is that they have got a very solid CASA deposit ratio, and because of the extensive branch network, the Bank of Maharashtra and the Central Bank of India able to maintain very high level of CASA deposit, which will help them to post above average NIM for the entire PSU bank category. So that is why these two names specifically I like most.
Okay, all right. So that's with regard to the lenders. But BTST, STBT, 320. Shivangi, do you have a view?
So for BTST, my preferred pick would be, with Laurus Labs, which has seen a very good price surge in today's session. And we're seeing follow-up is quite strong on this one. So, reiterating this idea for BTST with a target of 825 and a stop of 777.
Serious momentum behind this. The only, Shivangi is of course looking at it from a charts and a derivative perspective. And the stock has given a tremendous rally. But I'm just trying to understand, and I think I know Mr. Chokalingham's answer. He doesn't like expensive stocks. And Laurus is anything but cheap. But Mr. Chokalingham, I'm still tempted to ask you, right? CDMO is looking strong. They are doing some very interesting things. By any chance, are you constructive or bullish on Laurus at these valuations?
Valuation comfort is not there, but I would give a hold rating because the
not
way...
bad, Mr. Chokalingam. This is the first time that I'm seeing you give a hold rating on a stock which is expensive. They must be doing something right.
Yeah. So, I've been tracking all these media news related to Laurus Lab. Yes, I have not recommended a buy. I would suggest to hold. See, you are absolutely right. I don't like expensive, but then if I continue to, remain very firm and don't compromise even at margin for a good management company, I would be out of the market. So there is also self-interest. I have to be in the market forever. So, and therefore, I like this company because though expensive, the kind of order they are getting for their business from various countries, that gives me a lot of confidence for medium to long term.
Okay. Well, that's interesting. To an extent, Harsh, Mr. Chokalingam is not wrong. If you are very stuck upon valuation comfort, in the current markets, you'll be out of the markets. There isn't almost anything which is cheap. Everything, including bonds, including gold, silver, everything is expensive.
Correct. So, Mr. Chokalingam, what do you do apart from the fact that you probably compromise a little bit, but the margin of safety is extremely low. So, what should you buy at this point, therefore?
No, I will give one answer based on what I learned. When I compromise, the risk is only the time frame. Laurus may not help you, but if you wait for 2-3 years, you are sure to get back your money or even make more profit. But if I buy Vola at 153, I knew for sure on the same channel I gave many times sell call, I would destroy my wealth. So that is the distinction I make. When I compromise, I ensure that I take a time element as a big risk rather than the absolute price point at which I am buying the stock. So from that perspective, you find some comfort.
No, sure. So duly noted, sir. Duly noted. But, we'll switch focus. Nomura has also initiated coverage on a Phoenix Mills. That's the other big buzzer. They've issued a reduced call on the counter, citing slow consumption growth in mature malls. Anushi is here to give us all of the details with that note.
Right. So, as you mentioned, Harsh, that Nomura has initiated coverage on Phoenix Mills, and this is with the target price of 1,400 that we are seeing. And this is with the reduced rating that we are looking at. Just yesterday, the company came out with its business update as well, wherein they reported about 12% of a growth, which was in line with what the expectations were concerned, and it was on the stronger side of the event that we are looking at. But this is in contrast to what Nomura had to say. Now, they are saying that the slow consumption growth in mature malls will lead to the kind of degradation in terms of where the revenue growth is concerned. This is, but the ramp up would be then seen from FY28 onwards. In fact, if you look at the consolidated EBITDA CAGR of 13% to 14%, which is expected by FY27 to FY30, is below the consensus target of where 20% growth is lying. There have been a couple of additions in terms of Phoenix Mills, in terms of the new malls which are there. They're not currently operational yet, but the ramp up is expected to drive the growth, but it still remains below the overall sentiment which was seen before. Even in the previous quarters, we'd seen about 20% of a growth, which has now subsided. 12% was the growth this quarter. Last year it was 7%. So while the retail consumption growth remains on the healthier side, it is expected to moderate in the coming quarters going forward. Even the valuations, if we look, appear stretched on that front, because of which they have given this reduced rating for the stock, and hence the target price of 1,400.
Okay, thank you for that, Anushi, for that perspective with regard to Phoenix Mills. Shivangi, do you have a view with regard to charts on this one?
So talking about Phoenix Mills, this one has been in a lot of action and momentum of lately, but overall we've seen that the stock has actually dampened quite a bit. It has been highly volatile and a very high beta stock for that matter, and I would suggest we could stay away from this one.
Stay away from this one. Okay, Shivangi, just one last question. The capital market stocks, forget the exchanges, but some of the others have been under a bit of stress. So let's leave Motilal Oswal out, obviously, but some of the others, do you have a trading view on any of them?
Neeraj, of course, the entire capital market related and exchange related stocks are looking quite good. But I'm afraid, of course, I would not be able to comment on particular stocks because of the disclosures and disclaimers applied.
I'll ask you one more thing very, very quickly, Shivangi. There is a call that is coming in from some brokerage houses on IREDA. Are the charts showing anything at all for IREDA?
Talking about IREDA, this has been in consolidation from the last 4 months. It's traded in a very muted manner. In fact, it's not been able to surpass 185 levels and hold above it. And on the lower side, we're seeing 140 is the base. So it has been oscillating in between these two levels, and it needs to cross either of them decisively for the next fresh leg of rally.
Okay, Mr. Chokalingam, quick 20 seconds. Do you like IREDA?
At current price, one can buy it after the massive correction.
Interesting. Okay. Thank you so much. Yes.
Keep that in mind.
Okay, thank you, Mr. Chokalingam, as well as Shivangi, for joining us this afternoon, for giving us all of those views. Let's quickly look at the Nifty. Some moves, obviously, over the last hour or so of trade. Just like yesterday, but a bit of a reversal that we've seen today versus what we saw yesterday. 0.25% lower on the Nifty 50. The Nifty Bank, though, holding fort and not contributing to that fall, or rather not contributing much to that fall, if I can call it. Let's look at the intraday chart on both the Nifty and the Bank Nifty. We did see a bit of a fall. While this is just a 0.25%, that just goes on to also reflect that for a predominant part of the day, we've been extremely range bound. And thereafter, of course, we've seen around a 0.25% or maybe a 0.5% drop, and we've seen a bit of a recovery as well. So around a 50-point recovery from that day's low. But now we're suddenly trading in a band of around 130 odd points. So slightly wider in terms of that band, but we've dropped very, very briefly. Let's look at the breadth and see whether that has changed at all, because it was even Steven where the Nifty 50 breadth is concerned. Right, so we've reversed with regard to the NSE advanced decline. and it was tapering in any case when we started this show at around 2 o'clock, but we've reversed and we've largely closed 1:1. But I want to really look at the Nifty 50 breadth, the heat map if we can. Let's pull that up, and there you go. Not much of a move with regard to at least the breadth on the index, but the gainers still staying steady and strong right at the top. The losers too. Some IT names in that losing pocket, but along with it, you have an Apollo Hospitals, a Hindalco as well. No surprise there, and a Tata Steel. So some metal names and IT names under pressure. Let's look at sectors as well, and we likely see the same texture there. In terms of the losers, the realty index and the metal index lead the pack in terms of losers. IT index not too far behind either, around 0.8% lower in trade today. FMCG is the top gainer once again, second time this week, around 0.7% higher. Auto is the other one which has outperformed. Pharma closes very close to flat, just 0.1% higher, at least at close today. Let's pull up the pharma index. Let's see how it's played out through the day, because that was one of the sectors which was in focus, and that's what I want to see. The Nifty India Defense is the other one. Well, it's been largely range bound in trade today after that bit of a blip at the start. But let's pull up the Nifty India Defense Index as well, and there you go. So we've seen a bit of a fall from the day's high, 8918, and we've fallen nearly 100 points on this one, so which is nearly 1%. Now let me also try and get you perspective on the mid cap and small cap indices. Let's see how those have closed. Absolutely flat on the Nifty mid cap, a very similar fall and a bit of a bounce back. On the small cap also we saw the same kind of move, but 0.5% higher on the Nifty small cap. That's where it's standing out. We've actually outperformed where the Nifty small cap is concerned. Hiral's call this morning seems to have come true. So a big thumbs up for her, as well as up for the Nifty small cap index. So this is where some of the gainers are coming from, where the breadth is concerned. Let's quickly look at the BSE 500 top gainers, top losers as well. And those are some names which we've spoken about. Some names ought to be on your radar for various newsy reasons. Hindustan Copper being one, PCBL being the other. Yes, that's how we'll close it. Let's quickly look at what to look out for tomorrow, and the cues that we need to look out for. There'll be the FOMC minutes, which will help us judge which direction the FOMC is really taking, and those are some dividend announcements for you on your screen. Last off, there's going to be Indofarm Equipment, where 52% of the shares are going to exit lock-in, and we have earnings. Tata Elxsi, TCS, Anand Rathi and Ireda, 4 of those to come out with numbers tomorrow. So all of that and more, that of course will keep us packed for tomorrow. We're back to earnings season. But with that, at least for today, from Neeraj, myself, everyone who puts the show together, thanks so much for watching India Market Close. Stay with us, because what we're going to do is we're going to try and bring you all of the updates crunched into the next hour or so. Stay with us, Market Express, to take all the action forward.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज, और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So viewers, Nifty ends the day below 25,500 levels while the Sensex was over 150 points. Howard closed to 83,500 levels. Realty, metal and oil and gas ended the day in the red. On the flip side, autos were in the fast lane. FMCG defense also managed to stay resilient. PCBL Chemical, India's largest carbon black producer, stands to gain as Orion SA plans to shut down 3 to 5 of its 15 carbon black facilities in the Americas and EMEA by the end of 2025. Now, the carbon black, a vital component in tires, rubber and plastics, drives PCBL's robust outlook. So with the current capacity of 790,000 metric ton per annum, PCBL aims to hit 880,000 metric tons by FY26 and surpass the 1 million tons by FY28. So the Q4 EBITDA per million tons stood at 17,655 with a long-term target of 25,000 rupees, fueled by a shift to high-margin specialty and superconductive grades. So the stock rose 2% today, reflecting optimism for Indian carbon black players. Prestige Estates met its Q1 pre-sales guidance, reporting a 300% year-on-year surge to 12,126 crore rupees. Collections up 55% to 4,523 crore rupees. The blockbuster performance was fueled by its NCR market entry with the Prestige City, Indrapuram, where 80% of the inventory sold at launch. Average apartment realizations hit 13,339 per square feet. Now, the company launched 4 residential projects totaling to 14.94 million square feet, with NCR contributing 59% to sales, followed by Bengaluru at 21%, Mumbai at 12% and Hyderabad. Dixon Tech forms a 50:50 joint venture with Signify Innovations, now launching Lightanium Technologies Private Limited. The JV focuses on OEM operations in the lighting products and accessories, aiming to solidify Dixon's presence in the segment. So the cost of acquisition for which is 2.5 crore rupees. EPAC Durable has launched commercial production of washing machines at its Sri City plant in Andhra Pradesh. So this move strengthens its position in the white goods segment, aligning with its diversification strategy to reduce reliance on air conditioners. With a 250 crore rupees investment from Hisense for the facility, EPAC aims to boost long-term revenue growth. The company also venturing into air fryers and Nutri blenders projects over 35% top-line growth for FY26, capitalizing on rising demand for home appliances. Shalby Limited signs a landmark memorandum of understanding with Sri Vaishnav Vidyapeeth in Indore, launching cutting-edge BBA and MBA programs in the healthcare and hospital management. So Shalby, a leader in healthcare, provides hands-on practical training, ensuring students gain invaluable real-world experience in the dynamic healthcare industry. So this collaboration empowers aspiring professionals with the skills and expertise needed to meet the sector's ever-growing demands. Varroc Engineering and its subsidiary Varroc Corp Holding face a massive arbitration order worth 570 crore rupees from the International Chamber of Commerce. So the order initiated by Op Mobility Lighting Holding stems from alleged breaches of a securities and purchase agreement signed in April 2022. So Varroc is actively evaluating the matter and exploring all the legal and contractual remedies to address this claim. So the company vows to vigorously contest the allegations as this high-stakes legal battle unfolds. JSW Steel reports a robust Q1 business update, with crude steel production surging 14% year-on-year to 7.26 million tons. However, production dips 5% quarter-on-quarter due to planned maintenance shutdowns of the blast furnaces. Capacity utilization at Indian operations stands steady at 87%. JSW Steel confirms all furnaces are now back online, operating at optimal levels, signaling strong momentum for the steel giant. Gujarat Pipavav Port container cargo volume dips to 1.64 lakh TEUs, reflecting a slight slowdown in the container traffic. Meanwhile, dry bulk cargo volume remains steady, holding firm year-on-year at 0.55 million metric tons. Now, in contrast, liquid cargo shows a positive trend, rising from 0.34 million metric tons to 0.41 million metric tons. So this mixed performance highlights stable demand in bulk commodities alongside a modest decline in the container shipments, while liquid cargo continues its upward momentum at the port. Jefferies delivers a bold outlook on consumer staples, spotlighting contrarian opportunities in the fallen angels. The brokerage sees gradual improvements in demand and margins, with limited downside risk and significant upside potential if these stocks rebound. Varun Beverages, Hindustan Unilever, and Asian Paints emerge as Jefferies' top contrarian picks for the next 12 months. Asian Paints earns a buy rating with a target of 2,830 rupees, up from 2,000 rupees. So Varun Beverages also secures a buy at 560 rupees, revised from 650 rupees. So while HUL holds a buy at 2,950 rupees. Nomura initiates coverage on Phoenix Mills with a reduced rating and sets a target price of 1,400 rupees, citing concerns over slow consumption growth in its mature malls. Now, the brokerage expects a gradual ramp up in the performance only from fiscal year of 2028 onwards. So despite this, Phoenix Mills projects a consolidated EBITDA compound annual growth rate of around 13% by FY27 and 14% by FY30. So, however, Nomura views the current valuation as stretched, suggesting limited upside potential in the near term amid cautious demand outlook in the retail real estate segment. Motilal Oswal initiates coverage on Delivery with a buy rating and sets a target price of 480 rupees. So the company is built to scale and wired for speed, positioning it well to capitalize on the growing express logistics opportunity. MOSL expects Delivery to strengthen its market dominance and achieve a robust 14% compounded revenue growth. With lower debt levels, the company is well equipped to fund its capital expenditure needs and is actively focusing on acquisitions. So by providing integrated logistics solutions, Delivery aims to further accelerate its growth. Jefferies maintains a buy rating on Adani Energy, setting a target price of 1,150 rupees. The company locks in medium-term double-digit growth, fueled by 61,600 crore rupees worth of transmission projects, up 3.6 times year-on-year. So Mumbai distribution stays strong, while Mundra adds room for upside. Smart meter commissioning gains traction, emerging as a key growth catalyst. Jefferies reaffirms its buy rating on Adani Green Energy with a 1,300 rupee target, citing a 3.5 times capacity expansion from 14 gigawatt to 50 gigawatts by 2030. So the brokerage highlights accelerated capacity additions with 2.6 gigawatt added in the Q4 of FY25 and 1.6 gigawatt in Q1 of FY26. Valuations at a 60% discount to the January 2023 peak, so offer significant upside potential. Now, a 9,350 crore rupees promoter infusion strengthens the balance sheet, supporting execution at the 30 gigawatt Khavda project. Despite risks like execution delays, Jefferies sees Adani Green's robust growth and prudent capital management driving to 15% market share by 2030. EPAC Durables kicks off commercial production of washing machines at its Andhra Pradesh facility. So this is marking a strategic expansion in the white goods segment. Now the move positions the company to capture more market share and fuel long-term revenue growth. Supreme Industries secures a 54 crore order from BPCL to supply 2 lakh units of 10 kg composite LPG cylinders. Now the deal strengthens its industrial supply portfolio and expands its footprint in the gas utility segment. The company commits to executing the contract within 6 months. Union Bank of India kicks off the fiscal year with a muted business update. So deposits slip over 2% quarter on quarter, while the loan growth also dips slightly. CASA trends stay mostly flat year on year, but see a 5% drop sequentially. So despite some annual growth there, the overall slowdown raises caution around the business momentum heading into the Q2. Nomura initiates coverage on Godrej Properties with a reduced rating and sets a target price of 1,900 rupees. So the brokerage firm expects companies' pre-sales momentum to lag behind expectations, citing concerns over the volume-led growth strategy. Risks include potential equity dilution and execution hurdles. Valuation appears stretched, prompting a cautious outlook. JP Morgan labels India's electronics manufacturing services a sunrise sector, projecting a 32% revenue CAGR through FY30. Now it initiates overweight ratings on Syrma SGS at 800 rupees. So Dixon Tech at 17,700 rupees and Keynes at 7,150 rupees. So this is citing robust growth. Syrma is set for margin expansion, Dixon for mobile-led growth until FY27. And Keynes for a 46% CAGR, targeting $1 billion by FY28. So Amber and Signed DLM get neutral ratings at 7,350 rupees and 450 rupees, while Avalon is underweight at 650 rupees. Exports are a long-term growth driver for Syrma Signed and Avalon, but their 3 times rally over 3 years limits the upside due to its premium valuations. Indigo is looking to lock in more wide-body aircraft for its global expansion plans. The airline is likely to confirm an order for 40 more Airbus A350s on top of the 30. And it has also, already signed up for it. Deliveries are expected to begin in mid-27 as Indigo prepares to boost its presence on the long-haul international routes. Now, in a significant move for India's rail sector, Tata Autocomp, a leading auto parts manufacturer, and Europe's Skoda Group have announced a joint venture. So this partnership will focus on manufacturing railway propulsion systems and components right here in India. So this collaboration, backed by substantial multi-billion euro investment, aims to bolster India's expanding railway and public transportation networks. Viceroy Research, a Delaware-based investigative firm, has shorted Vedanta Resources a $4.9 billion debt, calling its group structure financially unsustainable and a risk to creditors. So the report alleges Vedanta Resources, parent of Vedanta Limited, drains cash from its Indian subsidiary to service its debt, forcing Vedanta Limited to take on the excessive leverage. Viceroy highlights discrepancies like inflated asset values, capex fraud, and governance failures, likening the setup to a Ponzi scheme. So proposed demerger, it claims that won't solve the cash crunch, but will burden new entities with debt. So Vedanta has dismissed the report as malicious misinformation. ICICI Prudential Asset Management Company files for an IPO with the UK promoter Prudential Corporation Holdings, selling shares worth about 10,300 crore rupees. So this is an offer for sale, meaning no fresh shares are issued and all proceeds go to the promoter. So the IPO could value the company at around $12 billion, making it one of the largest in the country this year. ICICI Bank holds 51% stake, while Prudential holds 49%. So the bank is actually planning to buy up to 2% more shares to maintain majority control. ICICI Prudential AMC is India's largest asset manager with a 13.3% market share and over 1.45 crore investors. China is cracking down on delayed payments in its auto sector. So the country's industry ministry has launched a new online platform where suppliers can report late or unpaid bills by automakers. So this comes amid the growing concerns that long payment cycles are hurting smaller suppliers. In response to new government rules, major car makers like BYD and Geely have actually pledged to pay suppliers within 60 days. A Jaguar fighter jet of the Indian Air Force crashed near Rajasthan's Churu district. The cause of the crash is not yet known. Visuals from the site show thick smoke rising from the debris as rescue teams and local authorities rushed in. Initial reports say that 2 bodies have been recovered from the crash site. An official statement from the Indian Air Force is still awaited. A tragic incident unfolds in Gujarat as the Gambhira Bridge in Vadodara collapses, sending 2 trucks, an SUV and a pickup van and an auto rickshaw plunging into the Mahisagar River. So at least 10 people lose their lives, with 6 others injured as rescue operations have intensified. The 40-year-old bridge linking Vadodara and Anand gives way around 7:30 a.m., disrupting the vital connectivity. So local authorities, fire brigades and the NDRF is working tirelessly to rescue survivors and recover the vehicles. Prime Minister Modi has announced 2 lakh rupees of ex gratia for the deceased's kin and 50,000 rupees for the injured. The University Grants Commission has issued a strong warning to colleges and universities that using WhatsApp groups to harass juniors will now be treated as ragging. The UGC says that forming informal groups to mentally harass or threaten juniors is a serious violation and will invite strict disciplinary action. So the advisory also warns institutions that failing to act could result in grants being withheld. Tamil Nadu Chief Minister M.K. Stalin has stepped in to resolve a family dispute between his nephews, Dayanidhi and Kalanidhi Maran. So after Dayanidhi Maran sent a legal notice to his elder brother over a shareholding issue in the Sun TV, Stalin personally called both brothers for a meeting. Sources to NDTV Profit say that the Chief Minister helped broker a compromise, with Kalanidhi Maran agreeing to give more shares to Dayanidhi. The Food Safety and Standards Authority of India has introduced stricter rules for e-commerce platforms selling food online. So these guidelines announced last week require platforms to ensure safety and proper labeling of food items or face serious penalties. So it's a big step to protect consumers who shop for groceries and packaged foods online. President Trump unveils a 50% tariff on copper imports and floats a massive 200% duty on pharma products, allowing 18 months for businesses to adjust. So he signals further action on chips and other sectors, emphasizing his push to localize manufacturing and counter foreign trade practices. US President Donald Trump escalates his trade rhetoric, warning that countries aligning with BRICS policies deemed anti-American will face an additional 10% tariff. So he accuses the bloc of trying to destroy the US dollar and declares that losing its global reserve status would be akin to losing a major World War II. Trump insists that dollar remains king and vows to impose heavy costs on nations challenging its dominance. Prime Minister Modi sets an ambitious target to raise India-Brazil trade to $20 billion over the next 5 years. He calls the partnership a pillar of global stability, with defense ties rooted in strong mutual trust. Clean energy and environmental goals remain central to both the nations, signaling deeper strategic and economic alignment. A deadly flash flood devastates the southern New Mexico after intense monsoon rains. Rescue teams carried out over 85 swift water operations with 3 people still missing and 1 entire house swept downstream. So local authorities urged the residents to avoid flood waters while emergency shelters are open, and climate experts warn such extreme weather could become more frequent. Joao Pedro, a recent Chelsea signing, scored 2 goals in his first start, leading Chelsea to a 2-0 win over Fluminense in the FIFA Club World Cup semi-final. So the match, played in hot and humid conditions, saw Pedro score early in each half. Chelsea now advances to the final to face either Real Madrid or Paris Saint-Germain. The Brazilian striker, transferred from Brighton for a hefty fee, proved his worth in the crucial match. Apple is in talks to acquire the US broadcast rights to screen Formula One when the contract becomes available next year, according to the reports. Now, the report follows the strong box office performance of Apple's high-octane racing film F1. The movie, which has crossed $293 million in its first 10 days, according to Variety and other outlets. Well, with that, viewers, it's a wrap on Market Express, but please stay tuned to NDTV Profit, and Malika will be joining us with Profit 360 on the other side of the break.
जनता के पास सवाल ही सवाल है। जवाब ढूंढने को वो देखती है न्यूज, और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
It's the biggest event that markets and economy are looking at. A possible trade deal between India and the United States, which we could hear about any time soon. It will create a seismic shift in the way these two countries trade with each other. Who is going to come out on top of these hectic negotiations? Stay ahead on the story. Catch all the breaking news and the analysis only on NDTV Profit.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make in our categories that we have been supplying to our defense force.
Nifty ends below 25,000 to snap a 3-day gaining streak, while the Sensex loses over 150 points but closes above 83,500 after a quiet day of trading. Most indices and lower benchmarks underperform the mid and small cap indices. US President Donald Trump announces 50% tariff on copper imports, boon for Indian copper producers but a bane for copper consuming industries. Separately, he also announces 200% tariffs on pharma companies. Inflows into mutual funds normalized in June after a bit of roadblock in May due to geopolitical uncertainty. Equity mutual fund inflows jumped 24% to 23,587 crore. Gold exchange traded funds recorded the highest inflows in 5 months in June. Viceroy Research shorts the debt stack of Vedanta Resources, parent company of Vedanta Limited, alleging the group structure is financially unsustainable and poses a material risk to creditors. Sources say Tamil Nadu Chief Minister M.K. Stalin has intervened between the warring Maran brothers to call for a truce. 9 people killed and several vehicles fell into the Mahisagar River after a section of bridge in Vadodara collapses. Sabhi Khan, an Indian-American techie, appointed as the new Chief Operating Officer of Apple. Hello and welcome. Good evening, viewers. This is Profit 360 on NDTV Profit, and I'm your host Malika Mishra. Along the next half an hour, we will be bringing you all the latest updates on markets as well as national and international news, so stay tuned. Let's begin with the markets today. The benchmark indices dip as trade uncertainty looms. The Sensex shed 238 points to close at 83,474, while the Nifty ended 45 points lower at 25,477. Sectoral trends were mixed, with FMCG leading gains. My colleague Harsh now joins in with a detailed market roundup of the day.
Well, it's more of the same this Wednesday as well. For a predominant part of the day, the market was extremely range bound. We were trading in a 70-point band, but maybe over the last hour or so, we saw some bit of volatility where the Nifty fell around 0.5% thereabouts and thereafter recovered a bit. We've closed around 0.1% lower on where the Nifty 50 index is concerned. So that's with regard to the Nifty. And now when we zoom out a little bit on the Nifty itself, we've been extremely flat this week. It's as flat as we can get. So that's the week gone by as well. Now, when I'm looking at the breadth was largely even Steven, but we kind of worsened a wee bit. Where the Nifty 50's breadth is concerned, we worsened a wee bit right towards the end. So around 22 odd stocks gained for around 28 stocks which were on the losing end of things. But a very different picture where the breadth on the overall exchange is concerned. So the NSE breadth was 1:1 at close, but we tapered pretty much through the day. So we worsened as the day went by. The Nifty mid cap, which closed in the red, but the Nifty small cap was the outperformer of the day, 0.5% higher on the Nifty small cap index. So that one really stood out in trade today. In terms of certain sectors and pockets within the BSE 500, or rather the sectoral heat map that did well, we had a couple of sectors which stood out. One was the Nifty Realty Index was down 1.5%. Metals was the other one which was lower as well. But FMCG was the one that really stood out in trade. It was a weak day of trade, but despite that, FMCG 2 out of the last 3 days has been the top sectoral gainer, and that's what's really standing out. Another note from Jefferies kind of aiding the index higher. So FMCG was that one pocket. Last off, with regard to certain names, PCBL was one that really stood out. Philip Carbon Black was one of them. But the BSE 500 top gainers, top losers, plenty of movers on either side. Union Bank on the back of their quarterly update, disappointed the street. And PCBL was one that really stood out, as Orion, the global carbon black maker, decides to shut down shop. So that's how really it moved.
Thanks, Harsh, for giving us all the key details of how the market moved today. But Kryzac closed over 25% higher after making a strong debut on the bourses. The B2B education platform listed at a premium of 15%. The company's IPO closed on the 4th of July and the issue size was 860 crore rupees, with QI base subscribing over 141 times. Let's now listen to the company's Christopher Flood-Nagel, the CEO of the company Kryzac UK, who said their largest destination is UK, the United Kingdom. He also added that his largest source of market remains India. Let's listen in.
The UK is still our largest destination market, and our largest source market remains India for now. However, as we are expanding into more and more different source countries across Africa, across East Asia, we continue to grow our market share in the UK. So maybe previously we were working with a partner just in South Asia, then we expand to work in Africa as well, and finally also East Asia. So continued growth in the UK is coming from our continued expansion across the world.
Let's shift focus to the other big news today. The Association of Mutual Funds in India, or also called AMFI, has released the mutual fund data for the month of June. SIP inflows rose to 27,269 crore, which is an all-time high. My colleague Alex joins in with more details on the June AMFI data. Over to you, Alex.
So the big headline, of course, is that SIP inflows and gross SIP inflows are at an all-time high. They've stood at 27,269 crore rupees in the month of June, and that has eclipsed the previous high, which was in the month of May, of 26,688 crore rupees. And that has contributed to a certain extent to an improvement in the net inflows into actively managed equity mutual fund schemes, which in the month of June stood at 23,587 crore rupees, and that compares with a net inflow of about 19,000 crore rupees. Now, this is particularly important because in the previous month, there were also new fund offers that generated about 4,000 crore rupees worth of inflows, and this month there were inflows of only about 1,400 crore rupees or thereabouts, and even less in the way of inflows into actively managed funds through new fund offers. So all told, you have flexi cap funds, you have small cap, mid cap, large and mid cap, as well as multi cap funds that have gotten pretty decent inflows. What is interesting is that the sectoral and thematic category, which is a investor favorite, has actually seen outflows if you remove the NFO that was launched